All right. So just want to talk about some of the loan programs we offer with our team and company here at American Pacific Mortgage. So let's start this presentation. So loan options at a glance include first-time homebuyer products, government loans, standard products, construction loans, purchase tools, and specialty products. So, the first-time homebuyer products really, I think, is where we get the most attention, as you can imagine. Down payment assistance. Essentially, if you're looking to purchase a property with 100% financing, this is a great way. You get a grant, right? So if you're doing a conventional loan at 5% down or 3% down, FHA at 3.5%, this will actually allow for most first-time home buyers and in some cases even repeat buyers to purchase a property with low down payment or 100% financing with that down payment assistance. So there are some national and regional down payment assistance programs that we have. So, the idea is get your dream home now. Don't wait or save for that down payment. And there's, again, some options that, are available for those that qualify in certain markets. So a great program. So here are, three programs that are well known for national down payment assistance programs. It's essentially a second mortgage. You do one loan and then this follows with a second loan up to 4%. And then essentially it would allow you to buy, as you can imagine, as we mentioned, 100% financing. Shinoa Fund, another way, right? 3.5% down. And it could work with like conventional mortgages or FHA and up to 100% financing for with a 660 credit score. Then Within Reach is another program that works in uh, throughout states except for New York with, you know, those regional FHA or county loan limits. Any questions, let us know. We'd be happy to help. So Click and Close is a national down payment assistance program. It's essentially combining a 30-year FHA or USDA first mortgage with the second lien that provides down payment assistance that can be used towards down payment or closing costs or to buy down the interest rate. It's really great. It could go up to 5% of the assistance. Flexible payment options would either be a 5 or 10-year option. Minimum credit 660 available nationwide. And this, of course, would help again with cash to close for those that are unable to come up with the closing costs or, would like to leverage a program like this. It's available. Now, Pathway is another one. This one's really great because it works as low as a 580 credit score. So a lot of folks ask, hey, what's the minimum credit score? And we usually say 660. However, this one offers a credit score of 580, 3.5 to 5% down payment assistance. Assistance is either a 10-year fixed rate loan, which is just 2% higher than the first rate, right? And it's a great affordable way to cover up front costs, down payment, closing costs, or even a rate buy down. And it does help buyers with lower credit get into a home without the down payment, which I think is the biggest thing there. Now, 1%, there are loans that are available with just 1% down. Our company offers a 2% grant, which gives you essentially 3% at closing. Buyer contributes 1%. Our company contributes 2%. And then the total of 3% equity is available, of course, at closing by doing that. And then this is for first time or repeat buyers. Credit score as low as a 620 credit score. Primary residence. Now, keep in mind, most of the down payment assistance programs require you to be a first time home buyer. Community lending, there are community products in designated areas, which generally have reduced interest rates, specific areas as low as 3% down. Now, we can usually combine these with other grants or assistance type programs. FHA and other loan types are allowed, and it's only for primary residences. So this is great for buyers looking to get a lower rate or more competitive rate in a market that we are, and it's based off of the community lending geographic locations. So it's essentially building wealth while investing in the neighborhood itself. So Home Ready and Home Possible, these are Fannie and Freddie Mac programs, 3% down. Mortgage insurance would be removed in these cases when you hit 20% equity. And then it's a flexible way, of course, for down payment. So you can use gift funds or you know, you would have reduced costs that would be able to assist with mortgage insurance as well, which is why it's a great option for buyers with limited income. So government programs, let's get into this. Now we have VA home loans, and this is great for those that served our great country. So you don't have to be just retired. You can be an active service member with 180 days of active service. It's 100% financing, no down payment required. There is no loan limit, no mortgage insurance, super competitive interest rates, and it works with a 580 credit score, which is really great. Now, reverse mortgages, this is for folks that are 60 or older. Essentially, getting reverse mortgage lets you access home equity to improve financing or finances, if you will, and it does so by leveraging the home. So it's available for purchase refinance. You keep the home ownership. There's no monthly payments required. The proceeds are typically tax-free, and debt does not pass to the heirs with this, right? So the advantages here is access to income, debt payoff, stay in your home, no monthly mortgage payment, create peace of mind during retirement, flexible way to manage finances. More government products would be FHA. Um, this is a program that we see all the time. It's pretty consistent in any market. As low as 3.5% down, allows for gift or down payment. Seller could actually pay closing costs up to 6% of the sales price. It's not limited for some home buyers. Interest rates tend to be really aggressive, meaning really good in most cases, and they don't discriminate on things like loan to value credit like you would with a conventional mortgage, meaning the interest rate, let's say the rate 6%. If you're to do a conventional mortgage, rate could be as high as 7%, depending on the credit and down payment. With FHA, it's 6%, no matter what your down payment credit is, generally speaking, as long as you meet the criteria and credit scores above 620. Once you get below 620, we tend to see some pricing hits, interest rates not as attractive. However, keep in mind also with conventional, if you have a credit score less than 660, that could actually, in most cases, hinder financing, and the system, the conventional loan systems that we use, like Fannie Mae or Freddie Mac system, would not be able to approve the client. So we have standard products, which would be our Star Loan program. This is for those that serve our communities, law enforcement, teachers, first responders, nurses. Incentives with reduced fees. It's a great way of saying thank you. So reduced lending fees compared with down payment assistance programs. Lender paid mortgage insurance options are available. And essentially with lower upfront monthly costs, more buying power with reduced fees, and it's tailored support for community heroes. It's a great program, something we're proud to be a part of. Doctor loans, there are loans available for those that are practicing medicine. This addresses challenges like student loans, new careers. If you're out of residency, right, we can do that with limited savings. So up to 100% financing is available. Loan amounts up to 2.5 million. There's no mortgage insurance, and it accepts employment contracts as proof of income, which is really great. So this is, another couple things is, we could skip out on mortgage insurance, higher loan amounts with less savings, and again, it's great for doctors looking to purchase their first property. So jumbo loans. We have loan amounts up to 2 million, options for as low as 10% down, credit scores as low as 660. And this allows our buyers to finance high value homes with flexible terms and use gift or stock income towards down payment. And then you can split mortgage options, may lower monthly payments is another option there. And then a variety of programs allowed with that. Conventional loans, these are your standard Fannie Mae, Freddie Mac loans, as low as 3% down. There's no mortgage insurance, you put 20% down. Or if you have mortgage insurance, you put less than 20% down, it essentially can be removed once you reach 20% equity. And it's available for primary, secondary, or investment properties. And then there are flexible loan options for many property types. So potentially lower long-term costs. And then, you could essentially build equity faster with that PMI removal. More standard products would be manufactured homes. We do those as well, up to 97% loan to value. And condos. We do your traditional condos with 97% with a credit score as low as 580. However, we still have non-warrantable condo products available as well. So let's look at construction solutions. So product highlights up to 95% financing, a 660 minimum credit score. You can secure the rate lock up to 365 days. Land you own may count as a down payment. Conventional FHA and VA options are available. This would be for construction and permanent financing one step. You can lock in your interest rate during construction. And we have streamlined approvals and draws. So you build that custom home if you're looking to do that. So we also have programs to team up with builders, which is incredible. Extended rate locks. We have closing guarantee, preferred pricing, priority pricing. Temporary buy downs are available. And of course, for buyers, more confidence with the new build, secure lower rates during construction, faster, smoother process, and access to builder incentives with APM's support. Home renovation, we do have renovation or rehab loans available. The 203K as well as the Fannie Mae Homestyle Freddie Mac Choice renovation. You could do this on 1 to 4 unit properties, condos, and townhomes. It's based on the future appraised value. And so you can find the property that has a great location and actually rehab it to where you want it to be. So purchase tools, secure lock. We can lock an interest rate up to a year. and that would be for new construction, or 180 days, 6 months for an existing home purchase. So it's a great way in a market like this where rates are all over the place to secure things and be set up pretty well. Keys on time. We actually have a keys on time guarantee where if we cannot close on time, we will pay the buyer or seller $2,000 if closing is delayed. We do need, of course, parties to participate, buyer, seller, appraisal, title, you know, just to make sure we get things moving, but we move really quickly here, and that's something we pride ourselves with. Temporary buy downs. So there are programs to lower your mortgage that first year or two. So like the 3-2-1, let's say your interest rate today is 7%. If you did the 3-2-1, year one would be 4, year two would be 5, year three would be 6, then it graduates to that 7%. It can be paid for by the seller, builder, or lender, and it's available for conventional FHA and VA. The advantage is here, lower initial monthly payments, right? And so it allows more affordability as you purchase that property. Bridge loans, this is a great way to purchase a property if you already own one, using the equity of one home to purchase the new property, essentially using the equity from current home to purchase a new one. Options for homes under or not yet under contract. Loan amounts up to $2 million, depending on the program. You can buy your next home without waiting to sell, which allows you to make a stronger offer without contingencies and smoothly transition between each property. So you have to sell one that rent and then buy another property. This is pre-lock, seller pre-lock. So sellers can attract more buyers by offering a forward lock discounted rate on their home listing. So if you're listing a property, you could actually offer a rate that you contribute to it. So seller's pre-lock fee is $995. Should find the seller if they use APM to finance the next purchase within 6 months of financing. It's a great way to attract more buyers, avoid lowering that list price. And then the seller gets to decide on how much they want to contribute up to 3% of the sales price to buy the interest rate down for their future buyer. Specialty products. So getting a lot of questions about this, but extended income loans, right? We have bank statement loans, profit and loss loans, which use the bank statements, the deposits in the bank statements to qualify, or a profit and loss statement to qualify the income. If you're self-employed, let's say, and you have difficult income to show on paper, it's a great way around it. Goes up to 4 million on loan amounts, flexible qualification without traditional tax returns, and it's great for entrepreneurs, gig workers, and investors. Um, some of these programs would be like, as I mentioned, that bank statement. So it's a 12 or 24-month bank statement loan. We're looking at the deposits there. We want to see, what the net expense ratio would be. Last for so there's a 600 credit score, but again, it skips traditional income paperwork, which is fantastic. Um, there are expanded credit loans as well. For those who have had a blemish on their credit history, like a bankruptcy, one day after bankruptcy or foreclosure or short sale. Loan amounts range from 100,000 to 4 million. It can be a fixed adjustable rate mortgage or interest only loan, depending on qualification and what the buyer wants. But it's a great way to bounce back from past credit events quickly, and a wide range of property options with tailored solutions for unique credit needs. So this is great for anybody who's a first-time buyer or even a repeat buyer. Investment loans. These are really popular now. DSCR loans, where we use the income of the property to qualify the property. So let's say the property rents for 5,000. Let's say the mortgage payment is 5,000. That's the rule of one. Makes a DSCR, or debt service ratio coverage rate, of 1. So if it meets 1, that's essentially what they look for with this. We're not using income or anything from the buyer other than showing what the rental of the subject property would then be. So loan to values highest 85%, meaning putting 15% down. It's available for single family homes, condos, and 1 to 4 unit properties. It's a great way to build wealth through real estate investing, flexible financing, and leverage rental income to qualify. So again, there's more of that DSCR. I have a whole presentation. It's actually in the playlist, but you can check it out on our channel. That kind of unpacks this program. Again, a great program. I'm a huge fan of it. We see a lot of requests for this program because it's actually really competitively priced. So it's one of those programs that just seem to do really well for a lot of different reasons. So there are foreign national and DACA loans. So if you have ITIN, we have loans that you'd be able to qualify for if you have non-traditional citizenship. It's a great thing to have for those that don't necessarily qualify. Again, with the social security number, or if they have a certain type of visa, this is a great way to get someone into a property with as little as 20% down. So homemaking lines of credit, a lot of folks these days have interest rates 2.5%, 3%, or even 3.5%. It's a great way to not touch that mortgage, but still draw equity from the property that they have in order to consolidate debt, invest, whatever they're looking to do. So it's pretty flexible. be used for repairs, emergencies, or investments, as I mentioned. And then you get to keep your low interest rate, but then you would have this second mortgage, which is a great way to just, again, capitalize on leveraging the equity that you have in your home. So we even have personal loans here, believe it or not. So if you're looking to request a personal loan from $5,000 to $100,000, there are those programs available. If you want to find out more on that, shoot me a message. Happy to send you the link. It's very easy to qualify. It takes about 24 to 48 hours to get qualified. Link loan, this is for buyers who aren't mortgage rate, but want the benefits of homeownership now. This is a great way to start building equity if you don't have or don't qualify traditionally. It's great for self-employed gig workers or new graduates. Essentially, it would allow you to get into property, and it's similar to rent to own type of transaction. So that's really kind of the snapshot of what we have here, but hopefully this helps and kind of answers any questions. Try to be as brief as I could and not take too much time as we present this. But if you do want to learn more, I'm here, right? Like, feel free to shoot me a message, visit me online, schedule a time. The links are below, and look forward to connecting with you.